Hello, and welcome back to Explain the Charts, your go-to channel for detailed technical and fundamental analysis. Today is October 22nd, 2025, and we are taking a close look at Amazon, ticker symbol Amazon. There has been some major news surrounding the company, and the price action has been very telling, so let's break it all down. The biggest story this week was the massive Amazon Web Services, or AWS, outage that occurred on Monday, October 20th. This outage took down major websites and platforms like Snapchat, Robinhood, and Zoom, causing widespread disruption. Typically, you would expect such a significant operational failure to hit a company's stock price hard. However, in a surprising turn of events, Amazon stock actually rallied, closing up over 1% on the day of the outage and adding another 1.6% yesterday. This has left many investors asking, what gives? The consensus from major news outlets and analysts is that the market is looking past this temporary disruption. Investors are far more concerned with the bigger picture, the reacceleration of AWS growth and Amazon's competitive standing in the critical artificial intelligence race. Amazon has been the worst-performing Magnificent Seven stock this year, largely due to concerns over slowing AWS growth. But analysts are now turning bullish, with many predicting a strong turnaround by the end of the year. They are pointing to initiatives like Project Rainier, a major data center build-out, as a key catalyst. Analysts at Deutsche Bank and Bernstein are forecasting AWS growth to accelerate into the 18 to 20% range in the coming quarters. Much of this optimism is also tied to securing more AI-related cloud business, particularly with partners like Anthropic. The upcoming third-quarter earnings report on October 30th is now the main event, where the company will need to prove it's capturing more of the AI cloud market. With that context in mind, let's turn to the charts to see what the price is telling us. Here on the daily chart, we can see the broader price action over the last year. The stock has experienced significant volatility, with a major peak around $242 in early February and another strong peak near $238 in September. We've also seen sharp drops, notably in early August 2024, and a massive gap down in early April 2025, which are often tied to earnings reports. Now, let's zoom in on the recent action related to the AWS outage. I'm filtering the chart to show just the month of October to get a clearer view. On October 20th, the day of the outage, we see this strong green candle, where the stock closed up 1.22%. The following day, October 21st, it gapped up at the open and pushed even higher, closing up another 1.65% at $222.03. This price action strongly confirms the market sentiment we discussed. The bad news was completely shrugged off in favor of a more optimistic long-term view. This bullish reaction has pushed the price up from the key support level it established around $216 on October 10th. That $216 level now serves as a critical short-term floor for the price. Looking up, the immediate resistance is yesterday's high at $223.32. Above that, we have a significant resistance zone from the highs in late September and early October, right around $228 to $231. Let's switch over to the 1-hour chart to get a more granular look at this recent move. Here we can see the dramatic sell-off on October 10th, where the price fell from $228 down to that $216 level we identified. Following that drop, the price entered a period of consolidation, trading sideways for about a week between $213 and $217. This consolidation built a base, and the gap up on October 20th was the explosive move out of that range. You can see a clear gap between the close on October 17th and the open on the 20th, which shows immense buying pressure coming into the week. Yesterday, on the 21st, we saw another powerful gap up at the open, from a close near $216.50 to an open above $218. The price then trended higher for most of the session before finding resistance at that $223 level. The hourly chart shows that momentum is currently strong, but the price might be getting slightly extended and could see a small pullback or consolidation. Now, drilling down to the 15-minute chart, we can see the intraday story of the past few sessions. On Friday, October 17th, trading was relatively quiet, with the price contained in a tight range. Then on Monday morning, the 20th, you can see the huge gap up at the open as the market completely ignored the outage headlines. The price established a clear uptrend throughout the day, with higher highs and higher lows, a very bullish intraday structure. Yesterday's session on the 21st started with another gap up, followed by a very strong buying wave in the first few hours. However, we can see that the momentum started to fade in the afternoon. The price peaked around 16:15 Universal Time Coordinated and then began to pull back, eventually closing well off its highs. This could be interpreted as some profit-taking after a two-day surge and suggests the $223 level is a formidable short-term resistance. So, to recap and look forward, let's return to the daily chart. The key price levels to watch are clear. Immediate resistance is the recent high around $223.30. A convincing break and hold above this level would open the door to our next major target, the resistance zone at $228 to $231. On the downside, initial support lies near yesterday's low around $218. However, the more critical support level is the October 10th low at $216. A break below $216 would negate the recent bullish momentum and could signal a deeper correction. So, what are the potential scenarios? The bullish case, which I see as about 65% likely, is that this positive sentiment continues into the earnings report on October 30th. In this scenario, we would see the price break above $223 and test the $228 resistance level before earnings. This outlook would be reinforced if the broader tech market remains strong. The bearish scenario, with about a 35% likelihood, is that the rally stalls here at the $223 resistance. If the price falls and breaks below the $218 support, it could trigger a pullback to retest the $216 level. A break below that key support would be a very bearish signal for the short term. Ultimately, the most important thing to watch is the earnings report on October 30th. The AWS growth figures and the company's outlook on AI spending will be the primary catalyst that dictates the next major trend for Amazon. Be prepared for significant volatility around that date. Finally, I must remind you that this video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own research and due diligence before making any investment decisions.